Gold prices holding this Tuesday, but still weaker as gold assets in the world's largest exchange-traded product fall to the lowest since 2008. Have investors given up on gold? That's the question. Joining us now from the CME is senior market strategist for RJO Futures, Phil Streible. Phil, good to have you back on the show.
Oh, thanks for having me.
Well, as I mentioned, holdings in SPDR Gold shares fell 0.4% yesterday. That's the lowest since September 2008. Some analysts we speak to say the market is too bearish and should bottom out soon. Do you agree, Phil?
Yeah, I think gold prices really, they went through quite a bit of liquidation. If you look about 8 sessions ago here, we were about $100 higher, from high to low $100. That's going to wash out most of your investors. A lot of people looked at some key levels in the trading, and once those were broken, we saw the liquidation continue. Now I can see over the last couple days sessions, we've seemed to flatten out a bit. So the liquidation has come side itself. I would expect those holdings to start to level out and actually start to pick up here as news has been digested.
Well, Phil, what about gold's reaction to last week's surprise jobs report and looming rate hikes? Do you think the Fed's next move has already been priced into the metal here?
I think that the initial rate hike that we should see in December, that has been priced in. The only things that could really kick that off or punt it farther out into next year is if manufacturing really starts to slide or we see some serious deterioration out of Europe. Now, if you look at what other things we're looking at here, we've got quantitative easing that's going to be increased over in Europe. That should push the dollar index just a little bit higher. It'll push gold prices just a little bit lower here. But I think that other than that, news-wise, we're completely factored in.
Okay, so you're on that side of the camp that does see a rate hike in December.
Yeah, absolutely. I think that there's no reason why they shouldn't do it. I mean, they should have done it several months ago, but the fact that they didn't, they missed their opportunity. Now, if you look at the way, most of the investing public, a lot of your analysts, everything, your traders, it seems like even, your mom and dad, they've all gone out, they have secured their mortgages. Everyone who's refinanced has done it. So now it seems like the natural progression for them to do is to raise the rates. They might as well get it done with this year. That way they can stick to them doing it in 2015. And I think it sets up 2016 where we won't have that initial rate hike right away in the start of the year. So traders are able to position looking a few months out.
All right, Phil, let's wrap with silver. I know in the past you've told me you really like the metal. Do you feel the same way even as the metal heads into its 9th straight session loss here, Phil?
Yeah, I love silver for the long term. So with it being down 9 sessions, I look at it like, hey, it's been on sale 9 days in a row. I think silver prices have one of the best opportunities to the upside. The reason is if you look at silver from just its fundamental standpoint, forget it's linked to gold and how it's affected by the dollar and everything else. Silver is the metal that, it's not really recoverable, financially from a recycling standpoint. So once it's tossed in the trash, that's the end of it. The other thing is that the uses of silver, everything from your iPad, your iWatch, to all your technology uses silver. But I like it from that nanoscience perspective and also the medical thing. It's one of the best metals here that are used for just killing off any kind of bacteria. So I like it from its medical uses mainly.
All right, Phil, thanks so much for being with us today.
Thank you for having me.
And thanks for watching this edition of the Kitco Gold Report. We'll see you tomorrow.